All right, we got the crypto market update started here very shortly. Gonna get the recorder out. Gonna be a bit of a quick one. I'm gonna go over some TA as well as some correlations, and then also the Fear and Greed Index. Correlations with the S&P as well as correlations with other coins. So I'm just gonna see. Yes, I can see this window. Gonna look over some interesting pairs here. All right, let's get this started. Yep, with that. Hey traders, welcome to another crypto market update. This video will be starting off with a little bit of global macro, but because of the correlations we'll talk about later, this is very important in my opinion to how the crypto market will react basically if and when it does drop, because there's some people who are saying that there's actually a decrease in correlation just because BTC is absolutely pumping and then the stock market is not going as high, but it's actually a mathematical calculation to see how it's correlated. So it's a little bit different than what some people may think. So quickly going over, this is next week's economic calendar. We got some PMI numbers, some non-farm payroll. The big one I think is going to be the unemployment rate. We can see that the forecast is 16%, and we're going to quickly touch on this before we dive into the actual crypto market, because I think that this is very relevant to the crypto market. Maybe some people might not think so, but with the high correlation of the S&P and BTC, they're going to move in similar directions. I think they will decouple sooner or later. We'll talk about a decoupling when we get into the correlations chart, but as of right now, we have a pretty high positive correlation between traditional markets like the S&P, Russell 2000, other indexes, and Bitcoin. And that's about all we have. Initial job loss claims hasn't really impacted the market much, considering we've been going up, and this is a weekly report, whereas the unemployment is a monthly report, so it's a lot more important. We're infrequent, so it has a higher impact within the market, I guess, as of right now, because the market's definitely a little bit disconnected from reality. All right. Quickly looking at the unemployment rate. So we can see that the forecast is set out to be over 16%. And the unemployment rate for April. We can see that the high of 2008, or like the financial crisis 2009, 2010 was the worst of it. We can see that the peak was, let's say, 10-ish percent, 9.9, 10% at the peak of 2008. 2001 wasn't bad at all. It was around maybe at the peak 6.3, 6.4, somewhere around there. And the highest point within the last 70 years, around a little over 70 years, is around 10.8. That is the highest unemployment rate percentage we've had in the entire time frame of this chart. But you're thinking, okay, well, if we're 16.1% as a forecast, well, we're way above this chart. Well, 100%, you are 100% correct, because that's how significant this move is. Now let's look at a longer term unemployment rate percentage from 1890 all the way to 2015. And what our chart shows is from around 1950 right here. So this is where our chart shows. And then we can see that the Great Depression, 1929, 1930s, was above 20%. And it wouldn't be surprising to have some speculation that we could be hitting those similar numbers, those plus 20% numbers for unemployment. You know, the next month is forecasted at 16%. So if we're in lockdown for a couple more months, it's not going to go higher. It's only going to get worse and worse as time goes on, really. I can't imagine it going higher unless we have a huge turnaround in the ability to control, get some vaccine, which I just don't think will happen, obviously, within the next couple months here. So I just think this will continue, which will just increase the unemployment to basically Great Depression levels. And in that case, you're thinking, okay, well, that has to get the stock market down. And I completely agree, because that's a very deflationary environment. And the stock market can only really go up in an inflationary environment where people are willing to purchase the asset more, and add buy pressure within the market. If no one's buying, obviously stocks can't go up in price. And in my personal opinion, I don't think just a single buyer of the Fed will be able to sustain this this correction within a bear market for infinite amount of time. Basically, is what they're expecting, and have a bias that I'm going to go against it. But we'll talk about that a little bit more in depth in a global macro update. Kind of going to stick to crypto markets, but going to make the correlation here because we've seen with Bitcoin and the S&P 500, we've had very high positive correlations. This is within the last 90 days. We have a positive correlation of 0.35. Now this is the second highest we've ever seen in correlation within 90 days. The highest point we've ever seen was basically at the break of the 6K triangle down to around 32. That was when we had the highest correlation of the S&P and BTC. And we're gaining traction to a point where we're possibly going to have the highest correlation yet again. So unless we have an instant decoupling from Bitcoin to the S&P 500, I do think that if the S&P falls, we will get a fall with Bitcoin as well. And I had this bias. I'm not going to go strictly off my bias, and we'll be looking at some charts, looking at basically reversed charts, or what you could call inverted scale charts, to show TA in a different way so you have more perspective of the same asset. And we'll go over that very shortly here. But just wanted to identify and illustrate that the positive correlation is still increasing between Bitcoin and the S&P. It's not like it's decoupling yet. I've seen some blog posts and some people say, Bitcoin is going up and it's decoupling from all other assets. I just don't think that's true. It's a mathematical calculation to get a correlation of two different variables. It's not just looking at a chart and say they look similar, they don't. There's an actual formula that goes into it. If you want to know more, it's called Pearson's coefficient of correlation, and that is the formula for understanding correlations within two variables or two assets. So this is a good chart and a good website because it allows you to pick different cryptocurrencies, different traditional assets like the US dollar, gold, S&P, VIX. You can get some cryptocurrency indexes, stable coins, and a bunch of ERC20 tokens. So great website all around. Next thing we're going to quickly look at is the fear and greed. We do have another thing of correlations, which we'll get into in a little bit. But first, we're going to talk about just the fear and greed, and then we'll get into the correlations between cryptocurrencies, between altcoins. So we see that the fear and greed is now kind of alleviated a little bit of the fear. We were in extreme fear last month and last week as well, but we did climb out of the major fear zone, and we've gained quite a bit of traction to now almost in the, I wouldn't say neutral, but it's definitely getting there. I'd still be a little bit hesitant, but I'm definitely surprised that we were definitely able to climb out of that little hole there, but I don't want to say it's a huge bull run commencing just yet. We'll get into the TA first. We'll talk about larger time frame key levels that we're going to be looking for. And if they do break, hey, they do break. That is going to have to change our bias. But for now, we're going to discuss the TA here in a little bit. But first, this is the correlations between different cryptocurrencies. I just put a bunch here. Bitcoin, Ethereum, Zcash, EOS, XRP, Tron, BNB, Litecoin, and Monero. I know there's a bunch more, and we can see that there's like VeChain, Nano. There's a whole bunch of them. But I just put some major alts here. And we can see that there are different time frames in which you're calculating the correlation. So right now it is 1 year. So we can see that the correlation between Bitcoin and Ethereum is around positive 0.77, which is a very high positive correlation. Oh, we can see right here, the Pearson's correlation coefficient quantifies the estimate strength of linear association between two variables. There we go. It ranges from +1 to -1. That's exactly what we were talking about. And then we can kind of estimate what are going to be potentially sympathy plays for being able to navigate in the cryptocurrency market. And overall, through many different alts, we can see that there's a positive correlation and a significantly positive correlation for almost every single pair that we can see, even on a very large time frame. We can see that there's not really many that are below 0.7. There are a few. We see 0.6, 0.66, 0.61, 0.67, but a lot of them are above 0.7, which is a very highly positive correlation. And if we move down into 30 days, some are more, some are less. Overall, we do see that there is a higher positive correlation when we move to the 30-day. 7-day, there's less. There's some 0.53s between Zcash and Tron. There's some 0.38s between Tron and BNB. So when we do get into the smaller time frames, they can be less correlated between Tron and BNB. There's almost no correlation whatsoever. But when we do look at the larger time frames, basically all cryptocurrencies are positively correlated. As long as they have a large enough market cap, they're going to actually receive demand when cryptocurrencies do become I guess like a hot hype topic in some sense in the general public. Obviously, people within the space are involved every day, but hype goes around in different waves in different sectors, obviously. But pretty important piece of information to note is the positive correlations on the long-term time frame in my personal view. All right, now let's go on to the price action. So this is what I was talking about the inverted scaling. So this is just the chart of BTC, and then we can obviously see that. I'm sure if you are well aware of Bitcoin, you know the larger time frames. But what I also did is put that exact same chart inverse. So then if we go to the weekly, we just pull this down, we can see that this is the inverse chart of Bitcoin, right? Pretty crazy. But if that doesn't look bearish to you, I don't know what does. And in my opinion, having an inverted chart allows you to get a different perspective of the markets. And how do you do this? You just right click on the scale, just inverted scale, and then you'd have to change some of your, let's just double click there, some of your candle body wick settings, and then just invert those. So red is green and green as red, and then you got yourself an inverted chart. So we're going to go off of this as well because we're going to do TA on both the inverted as well as the normal to get a better idea of where we currently are within the chart. So let's just first talk about the weekly, and then we'll get into the smaller time frames, and then we'll go over the normal chart of Bitcoin to make sure that we have the same bias and we can come to the same conclusion on both the inverted and the normal. Because if we can't, then obviously we have to dissect the markets a little bit more and come to a conclusion that makes sense for both the upside and the downside for the inverted and positive or the normal chart. So first things first, gonna get a little bit of coffee and then we'll dive in. All right. So the main thing that we want to be looking at is this anchor point. We see a key level of support, another level of support hold here. So right now we're at a major level of support. We know that for a fact. We're seeing higher lows. And we're basically looking to see if this is going to hold. That's going to be the main topic at hand. Now, this is inverted, so we just had a massive pump to the upside. It shows that we had a huge dump to the downside on this chart. And then we're seeing if it's going to break this or hold it and continue towards the apex of the pattern, which would be this resistance right here. And in my personal view, that's the larger time frame trade and setup that we have on our hands for Bitcoin. I did draw in some smaller time frame horizontal zones of support and resistance if we do look closely, and we can see that the price did respect our previous zone at around 95, although it's still pumping. We're seeing a tremendous amount of volume coming into the market, so yeah, you definitely don't want to fight this one. All right, so let's talk about the daily now. Looking into a little bit of the smaller time frames here, let's get our snip and then discuss it a little bit more in detail. So what we're looking for is, initially, we had a strong push to the downside. Now we're looking for a consolidation, and then we're going to see, okay, are we going to go back to the upside and then continue towards the apex of the pattern, or are we going to start to consolidate and then actually break this key level of support and continue the major downward momentum that this inverted chart is showing? That's going to be the main macro question that we have on our hands. In my personal view, is we made a strong push. We're probably going to see some level of consolidation, maybe here, maybe a little bit beforehand, but I do think that there's going to be some level of consolidation. After that consolidation, are we going to break the zone on the weekly chart, which would be extremely significant and extremely bullish for Bitcoin, bearish for this chart, but it'd be very bullish for Bitcoin? Or will we consolidate a little bit further and go on further into the journey of this setup until we inevitably do, I think, break this support zone and continue the appreciation for Bitcoin? But in my personal view, as of right now, I don't think that we are ready, but I heavily misjudged the level of buy pressure to push it all the way back up here. So who knows, we could just continue on our merry way until we actually start breaking this zone. If we do break this major support zone, that for me has just got to be a major significant zone that it's going to break. There has to be so much demand for that to actually occur. But if there is, I'm very willing to change my bias, have some flexibility, and really be looking to take longs if it does break this around 10K zone. Now looking at the smaller time frames here at the 4 hour, we do see a little bit of a support at around 85.60, 85.50, somewhere around there. But at the end of the day, like I said before, let's just get our snip yet again. I'm basically looking for some level of consolidation. I don't really see any trades as of now that I'd want to take. Definitely, in my opinion, still too early to call a short. At this point in time, after this massive push to the downside, I don't really want to be looking for any longs on this chart. I'd rather be patient, waiting for the consolidation to come a little bit more clear. After this massive push, having some level of consolidation where we're seeing a series of resistances and supports get held would be, in my opinion, a really good thing, because then you're going to have some structure within the market, and then you can look for a potential reversal where you can then look to make that downtrend inevitably. Or if we do get a consolidation and then you get a continuation where you start seeing the price break out of that zone, forming lower lows and lower highs, which would be bullish for Bitcoin, then you could be saying, okay, well, out of surprise, to be completely honest, it's still chugging along, continuing to go up. Price action hasn't been nearly as bullish in my personal view in terms of, let's just get this chart here, in terms of this whole move. So let's get here, like this bounce, in my opinion, wasn't super bullish just because we didn't form a true base. It looked like it was a wedge. We were creating lower highs, higher highs. So it was still creating higher highs, but they were getting less and less aggressive. And then we saw the price kind of consolidate, and then we saw a series of lower highs here and higher lows squeezing the price. When we did push out above that zone, that was when I basically just closed my bias on my short, although I wasn't bullish bias due to my fundamental factors and reasons, but it did end up pumping back up. So let's go to the weekly chart really quickly here. So now we're at the higher area of the resistance zone. I'd still think that it's definitely a little bit too early to be looking for any shorts, just because we had an absolute pump up towards the zone. We're very close to nearing the halving event. We'll see how the miners react, how aggressive the difficulty will adjust. We know that there should be a difficulty adjustment because of the revenues are getting cut in half for the miners, so then any inefficient miners are going to get taken out. But a lot of them are in profit right now mining because of the fact that BTC jumped so high. They can sell the asset that they're mining for a higher cost compared to what they were doing before, where if the price was depreciating, it's squeezing them closer and closer. But when the price of BTC is going up, their balance sheet and their profit margins are growing and expanding, which is obviously good for the business. So right now, miners are doing pretty well. They're seeing the difficulty basically remain the same, going up a little bit, but overall, they're seeing their profit margins grow. So definitely not seeing that right now. On the 4 hour, not really going to be getting into the smaller time frames, to be completely honest, because I just don't like. You could draw a little pennant here, but at the end of the day, I just think it's going to consolidate a little bit further. I'm mainly going to stick to the larger time frames because I do think that it's still too early. I don't want to jump the gun here. I don't mind patiently waiting until I have a better understanding of what's occurring within the markets. And right now, I'm just put this horizontal zone right here. At this point in time, I'm just going to patiently wait. I'd rather not be in a trade and be comfortably sitting out instead of being in a trade and kind of be confused as to why it is going one way or another. So with the positive correlations within the equities market, I don't expect the equities market to continue rallying for all of 2020. I just do not. You can argue me all you, or anyone can argue the bull side. I totally understand your perspective in terms of wanting to be an optimist, but I'm a realist. I'm looking at the actual numbers coming in within the economy, not hype, optimism, hope. I'm trying to kind of face reality, understand that there are bear and bull cycles, and it's just a part of it's just a part of the game, right? It's not pleasant, but you got to enjoy the light. And the only way you can do that is by understanding the dark, basically. It's kind of like life. So, not much more to talk about on the BTC charts. I know I'm being not too specific, but to be completely honest, I just don't really feel like there's an entry just yet for me to even take a look at, because there's just not really anything that I feel comfortable trading at this point in time due to the fact that it just absolutely pumped. Yes, I am looking at the correlations. Yes, I am still a little bit bearish biased on the very short term. Like, I'm not looking to enter a long after this massive push to the upside. But at the end of the day, the markets can remain irrational more than you can remain solvent. So I'm going to patiently sit, wait, not do anything, and wait for my opportunity. Because right now, I haven't seen it. I'm being a bear, basically. And being very patient, because I do not think that, technically speaking, this was a super healthy move to the upside. Because it wasn't. It was very weak looking, at huge pushes to the downside. It just did not look, technically speaking, super attractive to the bulls, in my personal view. So that's totally fine. It happens. I am looking for that next still move to occur, and yeah, if it doesn't work for a little bit, I do not mind. S&P did move down a little bit further today, not a huge amount. I'm still looking for 73.40-ish to break. That's the major level of demand that I'm looking to see break. Although, you know, when we did dump right back into the sub 2890 range, a little bit unfortunate because that's where I got stopped out. Literally that single bar stopped me out and then came right back in. But I'd rather not be in a trade, lose a little bit of money, and not have exposure to upside, especially when you're shorting. And sometimes you just got to accept a small loss and re-enter when you feel more confident. And as of right now, BTC definitely not looking to enter either long or short. I have no bias. I have no desire to be entering BTC as of right now. I just don't really look at it in a way that I want to be gaining exposure. Obviously, I have my long-term investments, but on a trading basis, yeah, I just don't feel comfortable going long or short at this very point in time. But that is my analysis. Not a whole lot of information provided, but it's just my opinion. So thank you very much for watching. I don't really have a whole lot more to talk about. We already talked about correlations. Looking a lot at the global macro recently, because that's obviously going to be playing a very big factor. Everyone's saying, like, oh my god, there's going to be inflation, Bitcoin's going to go to the moon, but I think a lot of people who are saying this don't understand inflation. Like, yes, there's a shit ton of money printing that is currently occurring. I understand that. But if the entire world is in lockdown and velocity absolutely plummets, that is very deflationary, extremely deflationary. So this talk about instant hyperinflation, I just don't like it's not like people were saving during Weimar Republic's hyperinflation or Venezuela's hyperinflation. People were buying everything they possibly could at that very moment because they know tomorrow their currency is going to be worth way less than what it is today or a week ago or a month ago, whatever the case may be. So the turn from, inflation because central banks, because of their Keynesian monetary ideas, psychology, they will print money in a recession depression. They will print unlimited money in a recession or depression. Budget deficits meaning nothing, basically. They can buy up their own debt. They can keep this merry-go-round spinning of this debt cycle going on for decades and decades. They are seeming like they're going to do so. At that point in time, that's what they're going to do. So then people are thinking, okay, that makes sense that there's going to be instant inflation, but there's not, right? There has to be two ingredients for there to be major runoff inflation. One is massive increase in money supply. We have that, but that's only one ingredient of it. The other one is people spending lots of money, lots of interactions, lots of transactions taking place, lots of currency being transacted on a national scale, right? Like there has to be those two things in order to see that major inflation that people are talking about. And in a very deflationary environment, which we are in right now, you're not likely going to see that major inflation, let alone runoff hyperinflation. That is a very different environment that the economy needs to be in. There has to be things open. In my personal view, like you can have a lot of transactions digitally and all that stuff, but with a lot of things in lockdown, I just do not think that there's going to be major inflation just yet. So then the huge, major case that Bitcoin is a hedge against inflation, there just isn't inflation yet. So I think people are just jumping the gun. I know I've been patiently waiting for a while here. Just fundamentals though, right? That's the thing. Technicals, yes. I could break it down looking at all the reasons why I didn't enter. Stupid reasons why I didn't enter. I should have entered on some of these longs here. But hey, that is life. But I'm going a lot based on the fundamentals, which in my opinion do play a significant role. So let's just quickly look at the economic stats and inflation rate, CPI globally. We talked about this yesterday, but this is the inflation rate for the globe, CPI numbers, because we can see there's not many countries that are seeing major inflation. There's actually a lot of countries seeing deflation on a month-to-month basis for March. I think April will be more deflationary than March for sure because the lockdown has just continued to go. Japan still in deflation, no surprise there. We've talked about Japan for quite a long time. The United States seeing deflation in March. They're going to see even more deflation in my personal opinion in April, and it's going to be very difficult for them to see inflation until this lockdown basically stops. There's not a whole lot more. Canada seeing quite a bit of deflation as well. But that's just my fundamental bias as to why I don't think the major bull run will come yet is because there is fundamental things that are playing a part, but in terms of the actual global worry of currencies collapsing or at least debasing to a point where they need to secure their finances and wealth in a different native currency, I just don't think that it's here yet. So I'm going to stick with my thesis. I'm going to basically patiently wait until we get a better opportunity to be looking for either shorts, or we're going to be really patient for longs. But as of right now, I'm a little bit still more short bias. Although I'm going to be very patient. I'm going to probably just stick with either commodities and the SPX, because I do find BTC still a little bit too noisy. It's not really in line with my bias of the fundamentals, and I'm going to wait until the technicals give me a little bit better of a signal for me to enter. So yeah, super transparent, going to be completely honest on there. So hopefully you guys enjoyed it. If you got any questions, drop them in the YouTube comment section below. And until next time, have a good one.